Credit cards didn't create freedom. They created a system where spending feels easy, but debt lasts forever. This is the dark story behind your plastic. From 1950 to today, the trap only grew deeper. The story of credit cards begins in the 1950s, a time when America was booming, a time when shopping was becoming a culture, and companies realized something powerful. People spend more when they don't feel money leaving their hands. This discovery changed everything. It created the first modern debt trap. The Diners Club card launched in 1950. It wasn't made for the poor. It wasn't made for emergencies. It was made for businessmen who wanted convenience. But convenience has a price, and companies knew that price could grow forever. Soon, banks entered the game. Bank of America released the first mass-market credit card in 1958. They mailed thousands of cards to random people. No request, no application, just a card, just easy money. People were shocked. They had never seen anything like it. But they used the cards, and once people used them, banks discovered gold. People spent more than they had. People paid late. People paid small amounts, and the longer they took, the bigger the interest became. This was the moment banks realized something dangerous. Debt is more profitable than payment. From that point on, credit cards weren't about helping people. They were about trapping them. By the 1970s, interest rates rose. The economy slowed. People were struggling. But credit card companies saw opportunity. They pushed a message that sounded innocent. Use your card when times are tough. It sounded helpful. But it wasn't. It was strategic. Debt became normal. People used cards for groceries, for bills, for survival. And once survival connects to debt, escaping becomes almost impossible. Then came a major turning point. In 1978, a Supreme Court ruling changed everything. Banks could now charge any interest rate they wanted. No limits. No caps. No restrictions. This was a gift to credit card companies. A weapon disguised as a financial tool. High interest rates exploded. Late fees increased. Minimum payments decreased. Spending became easier, but repayment became harder. The trap was tightening. People didn't realize it yet. Because marketing was powerful. Advertisements showed happiness, vacations, freedom, luxury. Not debt, not stress, not the endless interest cycle. And that cycle was designed with precision. Minimum payments kept people stuck for years. Interest kept growing silently. Late fees punished small mistakes. Over-limit fees punished emergencies. Banks knew exactly what they were doing. Debt became predictable. Debt became profitable. Debt became the business model. By the 1990s, credit cards dominated American life. Millions were using them. Millions were struggling. But banks made record profits, and with every new customer, the system grew stronger. Then came the 2000s, a decade of aggressive lending. Banks targeted students, young people, low-income families, people who didn't understand the danger, people without financial experience, people who would depend on credit for survival. It was the perfect recipe for lifelong debt. And credit card companies knew it. The trap became global. Countries around the world adopted the same system. Spend now, pay later. Stay stuck forever. This was no accident. This was evolution. An evolution built on interest, fees, and financial psychology. And it was only just beginning. Entering the modern era, credit cards became unavoidable. They became a requirement for online shopping, a requirement for travel, a requirement for everyday life. And with every requirement, the trap deepened. But companies didn't rely on interest alone. They created rewards programs, points, cashbacks, miles, all designed for one purpose: to make people feel smart while falling deeper into debt. Rewards gave people a dopamine hit, a sense of victory, a sense of winning against the bank, but the bank always won. Because rewards are backed by interest. Someone somewhere pays for every free mile, every cashback, every bonus point. And that someone is usually the person trapped in debt. This psychological strategy was intentional. Make spending feel good. Make paying feel optional. Make debt feel normal. Soon, technology evolved. Payments became invisible. Tap, swipe, click, buy now, pay later. Digital wallets, auto payments, subscription traps, all designed to disconnect people from the reality of money. Because the less money feels real, the faster people spend it. Credit companies perfected this. They studied habits. They studied emotions. They studied weaknesses. And they built a system that always wins. A system where a $100 purchase can turn into $300 over time. A system where a small delay becomes a massive penalty. A system where banks earn billions from people who can't escape. But the darkest part is still ahead. In the last decade, interest rates soared again. Late fees climbed. Minimum payments shrank even more. Debt climbed to record highs. And people believed they were at fault. They weren't. The system was designed this way. Designed to make you overspend. Designed to keep you paying forever. Designed to punish mistakes. Designed to reward the bank. Credit card debt became a global crisis. Households struggled. Families fought. Stress increased. Mental health declined. Debt turned into a silent epidemic. People worked harder. But the debt barely moved. Years passed. Interest grew. And many realized the truth too late. Credit cards were not financial tools. They were financial traps. Traps built on decades of evolution. From the simple Diners Club card to modern AI-driven debt algorithms, the goal remained the same. Make spending easy, make debt permanent, and turn ordinary people into long-term profit machines. But understanding the history matters. Because history reveals patterns, and patterns reveal power. The power banks hold. The power debt creates. The power that traps millions. But knowledge also breaks patterns. Awareness creates control. Understanding creates strength. And today, more people than ever are waking up to the tricks, waking up to the traps, waking up to the dangers hidden behind a small plastic card, a card that looks harmless, but carries decades of financial manipulation, a tool that once promised convenience, but delivered a lifetime of payments. This is the dark history of credit cards, a history still growing, still evolving, still affecting millions every day, and unless people learn to break the cycle, the trap will continue for generations. If you want more deep financial truth stories like this, make sure to like, share, and subscribe. Your support helps bring hidden history into the light, one story at a time.